Recently, the euro came close to reaching parity with the US dollar, something that hadn't happened in 2 decades. The reasons behind its weakness remain important to understand, because the same forces could pull it down again anytime. Three big factors have been dragging the euro lower. First, Europe's economic momentum has cooled. Recent data showed a slump in Eurozone business activity. Private sector output actually fell, which immediately sent the euro tumbling. Growth is unspectacular, and inflation is finally near the ECB's 2% target, so the economy isn't giving the euro much support. Second, the European Central Bank and the US Federal Reserve are on different paths. The ECB has stopped raising rates. It even hints at cuts if the economy stays weak, while the Fed has kept US rates higher for longer. In fact, investors expect the Fed to make only a small rate cut next year, while the European Central Bank could lower rates much more, roughly 4 times as much, making borrowing in Europe cheaper. Higher interest rates in the US make the dollar more attractive to investors because that means better returns. So, yes, money flows into dollars and out of euros. Put simply, policy divergence equals a stronger dollar and a weaker euro. Third, jittery markets are favoring the dollar. In times of uncertainty, say fears of recession or global conflicts, investors rush into safe haven assets like the US dollar. That flight to safety boosts the greenback and pushes the euro down further. It's a classic case of risk-off sentiment. When in doubt, go with the currency everyone trusts. And even though here at CryptoVagabonds we see Bitcoin as the secure choice for many things, the dollar is still the king when it comes to global trade, liquidity, and investor confidence, at least for now. So, what does a weak euro mean for you? Europeans might see higher prices on imports like food or electronics because a weaker currency makes imported goods costlier, which can nudge up inflation at home. Yes, a weaker euro at the gas pump or supermarket can quietly raise the prices you pay. Also, a sliding euro can sting. Your money doesn't go as far abroad. A vacation to the US or buying any product priced in dollars, think gadgets or oil, becomes more expensive. Your euro now buys fewer dollars. In other words, visits to the United States become pricier when the euro loses strength. On the flip side, Americans, or anyone paid in dollars, get a bargain. A strong dollar means a trip to Europe is cheaper for them. Their dollar stretches approximately 10% further than not long ago. For example, a plate of pasta or a hotel in Italy effectively costs less in dollars now than it did before. Good news for tourists with greenbacks, bad news for European tourism businesses and shoppers. For investors and crypto enthusiasts, currency moves work both ways. If you're in Europe and hold assets priced in dollars, like US stocks, stablecoins, or Bitcoin, you've likely seen a boost. When the euro weakens, those holdings are worth more in euro terms. Even if Bitcoin's price stays flat in dollars, it rises when measured in euros. But the flip side is that anything you buy in dollars, from imported goods to certain crypto trades, now costs you more of your local currency. The euro's fall against the dollar came down to a perfect storm of softer European data, central bank split decisions, and global jitters favoring the mighty dollar. Keeping an eye on exchange rates can help you plan, whether it's booking a trip or balancing your investments, because these shifts can sneak into your everyday life. And here's the kicker. Currencies don't stay down forever. Maybe the euro continues to recover, maybe not, but now you know why it weakened and why it matters. Share this explainer with a friend who's traveling or trading, and keep an eye on those rates. Don't forget to like and subscribe to the channel if you haven't yet, and as always, stay curious and stay hodling.